All right, all right. Hey, everybody. Happy Thursday. Listen, I hope y'all are having a really great day and an even better week. So, listen, if you are new to this YouTube channel, first of all, do me a favor and put in the chat, if you're watching live, put in the chat the city you're tuning in from, put in the chat the state you're tuning in from, or the country, whichever one you feel most comfortable with. And also, I want to say welcome for those of you that are new. Now, if you are coming back, then welcome back and do the same thing. Put your city, put your state, put your country in the chat for those of you tuning in live. And if you're watching a replay, shout out to y'all for taking that time out of your day to come watch this replay because you feel like, hey, I really need the information. So let me take the time to do it. So thank you all so very much for watching the replay. Put your city, put your state, put your country in the chat, okay? Or put it in the comments, I should say. So, y'all, I'm really hyped because we're going to talk about some common mistakes that new traders make and also, how to avoid them. Y'all, this is really near and dear to me because it took me four and a half almost years to finally get it. And here's why, because part of it was how I was taught. A large part of it was what I was thinking, how I was thinking, and also how I was moving with what I was being taught. So there was a whole lot of things that I wish I would have done differently to get the results faster. But nonetheless, we're here. And I want to share with you all those things. So as we get started, please, y'all, make sure for those of you on Facebook, hit the likes, hit the hearts, okay? YouTube, though, I need y'all to hit the thumbs up first, y'all. For real. Like every time you come on, if you really love the content on this YouTube channel, every time you come on, just hit the thumbs up regardless, okay? Hit the thumbs up regardless because all I'm doing is coming on here, prayerfully giving you something that you have not heard before or a really much needed refresher, okay? And you're like, yeah, I'm doing that today, okay? Or this week, whatever you see fit. So hit the thumbs up. And if you have not done so yet on YouTube, hit the subscribe button and hit that notification bell so you know when I'm going live. If you are not part of the Prosperity Calls community, more than likely you're not going to know when I'm live unless you hit the notification bell. And even then, sometimes y'all YouTube kind of be tripping or whatever. So not all the time for me anyway. But, sometimes you might not get the notification. But at least if you hit that notification bell, you should be well informed. All right. Now, I want to say this before we get into this entire series, this new series that I'm excited about. Y'all remember, trading in any market is most definitely high risk, okay? But definitely trading in the foreign exchange market and the cryptocurrency market, this really does come with a higher risk than trading in the stock market and whatnot. So I really need you all to pay attention to what you're doing. Practice really good risk management. Do not put any money in the market that you cannot afford to lose. All right, we want to use our disposable cash, disposable income that we're probably gonna blow on some nonsense. Okay. Use that and put it in the market to help us to multiply it. All right. Remember, I am not a financial advisor. I'm not a licensed trader. I don't work with the CFTC or anything like that. I am a student like most of you. The only difference is I may have a bit more experience. I may have a bit more years on you, and I've more than likely made a bit more money than you, but that's okay because I want you to get to that point where you either get to where I am, but faster, but also I would really love it if you surpass me. Okay, that is what I'm excited about. All right, so now we got the formalities out the way. Everybody already know. Yeah, if you have not done so, if you have not thought about it, share because we're about to get into the topic for today. I almost forgot, y'all. I ain't even introduce myself. I'm that excited. I'm sorry. Okay, so for those of you that are new to me, if this is your first time tuning into this YouTube channel or this Facebook page, my name is Leona Clark. I currently reside in the great state of Texas. I am a retired Army veteran. I did 20 years active duty Army, and we have come to Texas. Okay, we will be leaving soon, but we're here right now. All right, and I have a wonderful husband and two wonderful girls. I have two goddaughters on top of that, so that's a total of 4 girls that my husband has to has to keep happy. Okay. So I really do enjoy what I'm doing. I've been trading in the foreign exchange market for almost 6 years. I've been trading in the crypto space a little bit longer. It was just off and on for both of them because I was exposed back in 2017 to crypto. And then Forex market, I was exposed to that back in 2018. Okay. And that's why I was still in the Army. Took a little bit of a pause. And then in 2020, I picked it back up again because I knew that I was retiring from the Army at that time. And since 2021, April actually, 2021, I have been trading and investing full time. So it's been fun. I've actually started teaching people the things that I've experienced, some of the ups and downs, some of those pitfalls like I'm about to share with you all today, some things to avoid, but also how to avoid them, and some of the things that have worked for me. So I've been sharing that with people just to make sure that they have a better trading experience than I had in the beginning. That's the point of it, right? So that is a little bit about me. I am excited to share this series with you all because, the purpose of this, honestly, is to just help, new traders, not even just new traders, just to help traders in general to avoid these common pitfalls that a lot of us with a bit of experience have had. And also, I want to help you to establish like a strong foundation, so that way you're properly prepared to trade in 2025 and you can go take this market by storm. That's what I would really love to hear. Like, I want to hear those testimonies like, Leona, listen, I did it. I was consistent and man, it's going down, right? Like, I want to hear that from y'all, okay? So there's a few things that we're going to talk about in this series. So the first part, like I said, we're going over our trading plan, okay? So I definitely want to touch on that. We're going to touch on risk management a little bit today, but next week, we're going to go a bit deeper into risk management. So some of you may have watched the blueprint for Forex success, right? You may have watched that and been like, Leona, you did a whole day on risk management. Y'all, you can never learn enough about risk management. So that's why I'm doing it again. But I'm going to go a little bit into a different direction than what I did this last time because I really want you to get it, okay? So we'll get into that next. And we'll also talk about some technical analysis. We'll do a different spin on that as well. But I also want to, after that, go into the psychology of trading. Because whether we want to believe it or not, our psychology in this trading space plays a very huge, and I'm talking majority, role in our success. So we're talking 90 to 95% of our success in trading is based on that psychology. It's how we think, it's how we feel, it's how we react or respond to the market. It's not necessarily the skill. Skill is about 5%, y'all. So that means that we really need to make sure we build up our mental, our emotional, so that way we can go out here and not get our heads knocked off and not give away money to the market, but also to multiply. That's what we want to do, okay? And then we'll round it up with a bit of talk about continuous learning, leveraging, and adapting our strategies to different market conditions. So that's how we'll close it out with that. So y'all, the goal for this series is to just equip you with the tools that will help you to trade confidently, okay? It's going to help you to avoid those costly mistakes like myself, okay? Again, avoiding those pitfalls that I had, and also to help you to just develop a sustainable approach to trading so you can see that long-term success. So whether you're new to trading, whether you've had a bit of experience, whether you're profitable or not, and you just need a bit of refresher, this series has the potential to really help you, okay, to trade smarter and more consistently, not just in 2025, but years to come, all right? That is the goal. Now, if you are ready, type ready in the chat for those of you tuning in live. If you're ready and you're watching the replay, you can still type ready in the comments, okay? Because I'm going to give y'all a second to get yourself together. Get you a pen and pad, get you some water, get you something to drink, because you're going to need it. We need to go ahead and prepare because 2025 is around the corner, y'all. We have no more time to waste. We don't have to sit here and be like, oh, I'm going to wait until December. December going to be too late. Let's start preparing today, all right? First things first, since y'all are ready, we're going into why is a trading plan essential? So what is it? How do we use it? That's what I'm about to talk about right now. So our trading plans is nothing but like a roadmap. You know, like today in 2024, we got GPS. Put the destination in, and then it tells us which ways to go and all that good stuff. Well, back in the day, I mean, I didn't have to use it because I was a kid, but back in the day, they used to use actual road maps. You would have to open it up and see which routes would be best to get you to your destination. Well, that's what our trading plan is going to do. It's going to help us to establish the best possible strategies to use and whatnot. And this way, prayerfully, we maintain our emotions, we keep them in check, and we start to see that consistency because we're using that plan over and over again. We're adjusting it, but we're now seeing that consistency and ultimately getting that long-term success in the trading space. So that's what we want to do. That's what a trading plan is for. Now, here's the thing. I want you all to think about what happens when a trader doesn't have a plan. Like, just type some stuff out there. Put it in the chat if you're watching live. Put it in the comments if you're watching a replay. Like, seriously, like, what are some things that you think happens when a person doesn't have a plan and they go out here and trade? Okay, I'm gonna give y'all a second to just type some stuff in the chat. And if you're watching a replay, this gives you time to type it in the comments. Now, as you're doing that, though, I wanted to tell you a couple of things. One, this is the main thing. Let's be clear. You're gonna be impulsive. Without a shadow of a doubt, it's going to be impulsive trading. I want you to think about when you go to the store. If you don't have a grocery list, what is the likelihood that you're going to pick up stuff that you don't need? Because you're going to see it and think, ooh, I can use that. Ooh, I can use that. That's impulsive buying. They bank on that. Hence why when you go to the checkout, what is normally up there? Stuff that you know you don't need. I didn't learn that until later on in life. Like, they do that intentionally. So that way, the people who have a habit of impulsive buying pick some stuff up. Pick up stuff that they really want you to purchase. Okay? Y'all, it's just like that with trading. Without a plan, y'all, we as traders are more likely to jump into trades based on fear, like FOMO, because somebody said, hey, you know, Bitcoin yesterday was ran up to over 92,000, right? So the person who doesn't have a plan, if they didn't have a plan and they jumped into Bitcoin, more than likely, if they jumped in late, they got the head knocked off, because what happened to the price of Bitcoin? It went back down. So depending on where their area, their stop loss was at, that could determine if they lost massively or a little, right? But if you don't have a plan, you're not going to be able to time your entries and exits really well. You can't be a sniper in the market if you don't have any plan to execute. Okay? We don't go off our gut feelings here. We go off of strategy. That's what happens. You go off of gut feelings when you don't have a plan. When you do have a plan, you go off of strategy because you have the data to tell you what to do, right? So here's the thing. I want you all to think about this. If you are entering the market and you don't have a plan, and let's say news happens. Well, you didn't have a plan because part of your plan should have been to check out the news first, right? News happens, it's high impact news. You're in it for a buy, and then it's not in favor of the country. Whatever the news is, it's not in favor of the country. Their currency value now or strength goes down, and guess what happens? That trade goes down as well. So a massive sell-off happens. You don't see the trade because you're out and about doing what you do, didn't enter a stop loss, and now you have blown your account. This can happen. It can absolutely happen. We want to avoid that. Okay? Now, here's another thing. If we have lack of strategy, y'all, this is the fastest way. This is the fastest way to blow your account. Tell me I'm lying. Anybody, tell me I'm lying. This is the fact. If you don't have a strategy, you winging it. That's gambling, y'all. We do not gamble in trading. We use strategy. We use data. We don't guess. We're not, I guess the market's going to, no. Historical data tells me that the tendency for gold to go up right now because of this war, it is 90% of the time the market moves up. Okay, cool. So therefore, I should be preparing for a buy. When my strategy, my trading strategy says that I should buy, I'm buying. I have the data to back up that decision. When you don't have a strategy, you don't have the data. You don't have it because you don't have anything to go off of. So now that means that you're going to lose the money that you put into your broker account. For my people who are new to trading, when I say capital and brokerage and all that stuff, all this means is I put money into, for example, I put my money into a bank in order to utilize that money later to pay for something that I want or I need. Got it? Well, if I don't have a plan for that money and I'm impulsively buying and I only have, let's say, $200 in that bank account and I'm doing impulsive buys and it's $20 here, $30 there, $50 here, so on and so forth, guess what's going to happen to that $200 that's in my bank account? Gone. So now I can either say, hey, man, I'm just going to have to close that account, or I have to do what? Put more money in the account. Y'all, we don't want to have to do this. We don't want to do that. Okay? So we need to have strategy. Now, here's another thing. If you don't have a plan, if you don't have a strategy, this increases the probability of unnecessary stress and burnout. Trust me, I know. When you do not have a trading plan, y'all, you can become mentally exhausted, fatigued, to a point where, I'm gonna be honest, how many of you have been around someone that was super excited about trading and they took loss after loss after loss? They didn't learn their lesson. What happened to them? They eventually quit. That's what happens. So if you don't have a strategy, if you don't have a plan, and you are not adjusting that strategy, that plan, then more than likely you're increasing your probability of quitting altogether. Now you just lost money. That's when you officially lost, because you quit. So here's what we want to do. We want to establish how can we create a trading plan that's going to help us to be a bit more consistent, but an overall lead to success for the long term. Well, number one, we need to establish what are some of our, I wouldn't say number one. This isn't going to be in order. Okay. This one isn't going to be in order. I'm going to give y'all an order later, but this one is just what I first initially thought about. We need to establish what tells us to enter or exit the market. What tells us to enter or exit the market? I'm going to start with our entry criteria first. So 2 things that I always teach, no matter what. And I always share. Again, y'all, I'm not a financial advisor. I'm not a licensed trader. I share things that work for me. And I also share things that did not work in hopes to help you to make a really informed decision on how you want to go about trading in the foreign exchange or the cryptocurrency market. Everybody got it? Okay. So 2 things that I pride myself on, one of which is making sure that I know what I'm going to do to enter the market. Okay, so what tells me to enter the market? Number 1, news. Y'all, we need to know if there's some news that's going to happen. Okay, so is Jerome Powell speaking today? If Jerome Powell is speaking today, more than likely it's going to be a bit of volatility in the market, right? I'm not entering the market while he's speaking, because there could be a spike to the upside or to the downside when he's speaking. I can't predict that. So therefore, it's best for me to wait for the market to do what it's going to do. And then if it's within the time frame that I normally trade, then I can decide, am I going to buy? Am I going to sell based off of what the market is showing me today, historical data, so on and so forth, right? GDP, unemployment numbers, interest rates, all of that stuff plays a major role in the market direction and how price action and how price moves, okay? The decisions of our financial institutions and big money investors and whatnot, okay? So that's number 1. Currency strength is impacted off of our news. So if the news is not in favor of that country, then the currency strength may decrease. If it is good for the country, the currency strength may increase. This is going to determine if there's something we should trade or not. Okay? So those are two parts that I always teach and always suggest. Look at the currency strength, look at the news. Before you even think about opening up TradingView or open up your broker, their trading platform, those two things should be your go-to first. And then you can say, yeah, I want to look at trading X, Y, and Z. Okay. Now, another part of your entry criteria should be what price patterns, confirm my entry. Okay. So let's say we're looking at support and resistance. Okay. So if I study support and resistance, and this is what I use to help me to decide, well, if there's resistance here, then I should be preparing for what? A sale. If there's support here, strong support, then I should be preparing for a buy. Got it? Okay. I look at candlestick patterns. Let's say you trade breakouts. Okay. So maybe you trade Bitcoin, cryptocurrencies, specifically Bitcoin, ranges and consolidates a lot. So therefore, there tends to be more breakouts with trading Bitcoin for me. So I can trade the breakout with that. And this helps me to establish when I want to see the market retest and then establish a new pattern for me to enter for either a buy or a sale, depending on which direction it breaks out. Okay. You could use technical indicators. We talked about this in the last series for the FOREX success blueprint, right? We talked about this in there. I went into great detail on two of the indicators, the technical indicators that are used on average by traders, which is the moving average and the RSI. So when we're using those things, we can now use that to pretty much confirm what we've already seen in the market, whether you're using your candlestick patterns, support and resistance, trend lines, whatever you're using, you can use those technical indicators to confirm it. You don't have to use it to tell you to enter. It's just a confirmation. Last thing when it comes to our entry criteria is the risk to reward ratio, y'all. We need to make sure that we establish that. Okay. Am I looking for a 1 to 2? Am I looking for a 1 to 3? If you're like, Leona, I don't even know what a risk to reward ratio is and what you mean by 1 to 2, 1 to 3. Well, I went into really great detail in the last series, but I'm going to just do a quick overview. When we're talking about a 1 to 2 risk to reward ratio, that means for every $1 I put into the market, I'm anticipating receiving 2. If I say a 1 to 3 risk to reward ratio, that means for every $1 I put into the market, I'm anticipating 3. Everybody got it? And it goes on and on. The higher the number, right? 1 to 4 means $1 for every 4. I want $4. Okay, that's what I'm anticipating. So we need to make sure that we're doing that on a consistent basis. I'm going to tell y'all something. I got it. There are scalpers out there, and they may do 1 to 1, or they may not even say, I don't have a risk to reward ratio. I'm just looking for a number of pips. I got it. I don't do that. 1, I don't scalp. 2, I'm a day trader, and I make sure on a consistent basis, I'm looking for a bare minimum of 1 to 2. I want to get more for what I'm putting in the market. The juice has to be worth the squeeze for me to even think about entering the market. So that means for you in creating your trading plan, having an established risk to reward ratio is what's going to help you to maintain profitability over time and for the long term. Because the higher the risk to reward, the more buffer you have to take lessons in the market and still be in profit. Everybody got it? So if you have entry criteria down, we cover 4 things. Okay. I talked about support and resistance. I talked about breakouts. I talked about your technical indicators. And I talked about risk to reward. 5 things, because I talked about I didn't go into detail on candlestick patterns. So I stick to 4. Okay. Everybody got it? All right, cool. So now we're going to move on to exit criteria. So now part of our trading plan, we need to know what is the reason for us to exit? What tells us we should be exiting the market? Number one, y'all, establishing your parameters, establishing your targets. One in particular is your profit. Where do I anticipate my money being made? Establish that. You can do that through a fixed take profit level. That just means, hey, I'm aiming for a certain number of pips. I'm aiming for a certain percentage, or I'm anticipating it hitting a previous resistance or a support level, right? And that has a certain number of pips, all right? And that gives me my risk to reward. So cool. This is my profit area. Okay, and all of this, y'all, we should be basing this off of what? Back testing. Don't just do this just because. Back testing is our friend. Okay, now another way to do this, establishing our profit, is with a trailing stop loss. So let's say you are leaving your position open to run because there is strong momentum there, right? Like Bitcoin has done. I'm trying to refine an entry because I'm over here like, man, I need to get me a new entry. But anyway, because I don't make my money last week, and then this week I'm like, man, I ain't been able to get in. But anyway, but using the trailing stop loss, if you see that there's massive momentum with what you're trading at the time, you can choose to not put a take profit point there, but you can use a trailing stop loss. So if you say, hey, look, I'm looking for a risk to reward of 1 to 2 at a bare minimum. Okay, cool. So you can set an alert for that area, that price point, that would be your risk to reward of 1 to 2. That would give you that risk to reward of 1 to 2. And that way, when the alert goes off, you can now move your stop loss to that point and activate your trailing stop loss to trail 5 pips, 10 pips, 20 pips, 30 pips, however many you want it to trail for the duration of that move. So if the momentum continues and there's no pullback at all, then it's going to continue to move you in profit either up or move you in profit down, whichever one it is. Okay. Again, I went into more detail on that on the last series, that FOREX Blueprint for Success, Trade Smart in 2025. If you want to check it out, y'all, you can go back on YouTube. I started in October and I ended it last week, actually. So y'all can check that out, okay? So now here's another part to this exit criteria, and that is our stop loss. I do not do mental stop losses. I have to say that. There are people that I have learned from. They say, oh, yeah, I got a stop loss, but it's here. I don't do that. I did it. It didn't work for me. I make sure that I establish a price point where I'm comfortable with possibly losing money. Okay. So I can say, hey, with my candlestick pattern, my stop loss is supposed to be above the high of the engulfing candle. Okay, cool. Well, that's what my stop loss is going to be. But I have a tendency to do it 10 pips above that. Okay, cool. My lot size, though, is going to determine if I can still do that, and then now how much am I potentially going to lose with that, right? You could say, hey, it's support and resistance. So below this support is where my stop loss is going to be. Above this resistance is where my stop loss is going to be. It's totally up to you. The goal of setting a stop loss, y'all, is to minimize the loss, okay? You determine how much you lose in the market, not the person teaching you, not your mom, not your dad, not your cousin, not your brother, not your sister, nobody, but you determine how much money you lose in the market. It's all on you. Now, here's another thing, though. When it comes to the stop loss, you can actually say, hey, there's a percentage that I'm okay with losing. So you can calculate the stop loss based on a percentage of your account. Now, I'm going to say this a lot. You're going to hear this a lot, so bear with me. If it's sticking with you, great. If it's not sticking with you, that's why you're going to hear it over and over again, okay? If you are new to trading, y'all, please do not risk more than 1% of your account balance on any given trade. Everybody got it. you're going to hear it again anyway. So if you don't have it, you're going to hear it again. But the reason I'm saying that is because this ensures that you're not overexposed, right? You're not over leveraging your account. This is one of the fastest ways also to wipe out your account because you're risking too much and you're not gaining enough to cover those losses. Okay, so that's it when it comes to stop loss, y'all. Those two things for me are huge. Set your parameters, set your take profit points, set your take profit point, or use a trailing stop, but also stop loss, because you have to determine how much you're willing to lose. Okay, in the market. Now, here's another way that you can, figure out how to exit the market, and that's through using your technical indicators. Right. So if you're using the moving average to help you to confirm an entry to a trade, then you can also use that to help you to establish your exit. Right. So let's say you're in it for a buy, and then the moving average now starts to flatline. Okay. And the candlesticks are starting to fall below that. So they're on it, but they're kind of going down below it. Well, you could use that and say, hey, listen, there's a possibility for a sale. I think this is it for me, and that's only for a person that's saying, hey, I don't want to use a stop loss. I want to use the indicator to tell me to exit. Then okay. But I'm telling y'all, I'm stop loss all day. I'm stop loss all day because I don't want that. Listen, it helps me to not worry about nothing. So I'm team stop loss. Okay. But that's just me. So you can use the RSI too. You can use other indicators, but just know why you're using it, how you're using it. But back test before you do that in a live account. Okay. Back test to see if how you're using it actually helps you to make a really great decision on where you want to exit the trade should it go in the opposite direction. Okay. And then also, I want you to think about time-based exits. Okay. So this is something that I would say is more so, it kind of is in alignment with knowing what type of trader you are. Right. So when you are keeping your trading journal, let's say you don't really know what type of trader you are. You don't really know if you're a scalper or a day trader yet. You're kind of like, I think I'm a day trader, or I think I'm a scalper. The way to know is when you're keeping your trading journal, you can see how long you're in these trades and how you feel. So if you're a person that's like, God, man, this is too long. I've been in this trade for 2 hours. I don't want to be in the trade for 2 hours. You're probably a scalper. You're probably a scalper. If you're like, it's taking too long for the setups to come, man, I want to look on the 1 hour. I gotta wait a whole hour for this candlestick to confirm. Like, I don't want to do it. You're probably a scalper. But if you're like, yeah, I mean, I'm cool. As long as I'm out to trade today. I'm out to trade today, man. I'm good. I'm in profit today. Okay, cool. You're probably a day trader. So you just have to figure that out. But making sure that you keep track of that is going to help you to determine, what type of trader you are. But that also helps you with determining when you're going to exit as well. So if you haven't really established if you're a scalper or a day trader yet, if you find yourself closing out trades because you're like, I've been in it too long, you're probably a scalper. So now you need to adjust your strategy and adjust your stop loss to reflect that. So that way you're not in the trade too long. Right. And adjust your time frame that you're trading on. So that way you're not in the trade too long. Okay. So that part, I hope everybody got it. If you got something, if you learned something so far, let me know. Say, yes, Leona, I learned something. I'm learning. Whatever words you want to type, give me a thumbs up if that's easier for you. If you're not driving, okay? Because some of y'all be driving and y'all listening and stuff. So y'all be safe out there. Okay. And don't be at work over here, going in, and then you mess around and your boss catch you, man. Like, do what you need to do, okay, to get your money at your job. But I appreciate you tuning in while you're at work too. All right. And if this is helping you, share, y'all. All right. Let's continue. We're going to wrap this up because I want to get to the point where I show you all the trading plan, like, in order. Okay. So I want to talk about establishing some risk management rules as well in your trading plan. Because as a beginner, like I said, y'all, please do not just refrain from risking more than 1% of your account balance. I cannot say that enough, and I probably won't say that enough. I'm gonna keep saying it. Just a heads up, because I need you all to protect your money. You work really hard for that money. So if you're putting in $500 of your hard-earned money from your job, from your business, your side hustle, whatever, if you're putting that money into your account, if you're putting that 1,000, 5,000, whatever amount you're putting in there to start, you need to protect it. Risk management is going to help you do that. Okay. Using the appropriate lot size. If you're like, Leona, lot size, what is that? Go back, check out that series. Okay. Go check it out. The FOREX Blueprint for Success. Check that out. I go into detail about lot size and whatnot. But you need to make sure that you're using the right lot size. If you're like, hey, listen, I could probably lose more than I'm comfortable with, lower your lot size. Who needs to know that you're using a 0.01 lot size? You know, like nobody needs to know that. That's you. You are the one that's going to determine how much you lose in the market. It's you, not anyone else. The market doesn't determine that. You do. You say, I'm only okay with losing $50 today on any given trade. Well, that's it. Doggone it. Adjust your lot size to only lose $50. Stop sitting here letting these people trick you out of your money and making you feel bad for trading and only risking $25. No, if you say you only want to risk $25, only risk $25. As long as you're making money and you're ending the week, every single week in profit, I'm going to clap it up for you. I don't care how much you risk. If you're comfortable with that risk, I'm going to clap it up for you. All right? So risk management rules, make sure you establish those, but we're going to go into more detail on risk management next week. I'm going to do a little different spin than I did during the series, but still, nonetheless, risk management is key. That is a key part of your trading plan. Okay? And goal setting. Listen, y'all, this is something I got to talk about this real quick. Okay? We have to get in the habit of setting realistic, measurable goals, especially when we're trading. And here's why. This is going to set us up for success. It's going to set like a clear path for growth. It's going to keep our expectations grounded, so we're not sitting here saying, like I did when I first got exposed to trading, oh man, I'm about to make $1 million my first year because such and such did it, because such and such did it. No, man, like your path is not necessarily everybody else's path. Could I have done it? Maybe, if that was for me, but it wasn't for me because I had a whole lot of work internally to do to even get to this point, right? But I need you all, when we're talking about goal setting, I need you to start by like defining your percentage return goals. But make sure, like when you're saying, hey, I want to gain 1 to 2% in profit a week, make sure that's in alignment with your experience. Right? Like if you're new to trading, 1% per week you may be able to do for sure. You know what I'm saying? Maybe 2. It depends on how you are mentally, how you are emotionally. You know what I'm saying? You might be able to do 3%. But what can you do consistently? Let's start there. What you probably can do consistently is 1%. Okay? Then once you consistently do 1%, now, okay, boom, I'm bumping up to 2%. All right? But this way, when we're doing that, we are encouraging consistency. We're being able to manage our growth. We can go back and look and say, yep, I've been doing this, so now I can do this, right? So we want to also set, like, we want to set goals for skill development too, because we want to stay students. The markets consistently change. What you learn in 2024, all of it may not be applicable in 2025. A majority may, but a few things may be like, that's outdated, okay? So we want to think about mastering like specific technical indicators, mastering risk management, and becoming more disciplined. Working on candlestick patterns. Like I want to be able to identify these candlestick patterns like that. When I see it, I'm like, oh, I know what that is. I know where my stop loss gonna go. You know what I'm saying? Or chart patterns, right? We want to be able to have that chart pattern recognition, like down. We want to be able to, you know, just be more patient and emotionally detached from the market. You have to practice that though. So when we're focusing on that small, every small step, every small bit of gains, right? Yeah, I'm telling you, your profits are gonna come. Because we're not looking at just big picture anymore. We're looking at, hey, I know my end goal is this, but today, this is what I want to accomplish. By the end of the week, this is what I want to accomplish. So now you're walking it back and you're starting by the day, and then you're going to the week, and then it's going to the month, then it's going to the year. That makes sense? Okay. So look, y'all, let me share my screen. We're going to go into the trader plan. Let's go into the trader planner, and then we're gonna start wrapping this up. Okay, so let's talk about trader plan, y'all. Let's get it. Step number 1 of our trading plan, because I know y'all ready. Let's get to it. Screenshot, screenshot, screenshot. Every single one of these slides is 6 slides. Screenshot them, okay? So if you're driving and you can't write, this is a perfect time to screenshot. All right, so number 1, we're going to define our trading goals and objectives. I just talked about that. Y'all, you want to establish what your profit goals are. Make them realistic, okay, and measurable, okay? But that's number 1. Skill development, which I just talked about, okay? And then time commitment. I did not touch on that, and I'm about to touch on it right now. Time commitment. How much time are you willing to dedicate? And be realistic about this, y'all. How much time are you willing to dedicate to learning this skill? How much time are you willing to dedicate to trading in general? Look at your daily schedule and say, you know what? I know I can put in 1 hour. I know I can put in 30 minutes. I know I can put in 15 minutes on a daily basis. Now, if it's not 7 days a week, well, how many days a week is it? So now you establish the amount of time, but how many days per week is that? I need you to get that. Okay? Write that down. That needs to be part of your plan. Stick to that. And if you have to adjust because maybe your shift schedule changes, maybe something happens, you may have to take care of a parent now or something. Like, I got it, life happens. But don't sit down trading. Just adjust. Adjust. If you have to cut it down to 30 minutes and it's 3 times per week, but 30 minutes 3 times per week. Okay? Everybody got it? So that's step number 1. We want to do those things. We want to define our trading goal and objectives. Number 2, we want to determine our trading style and strategy. Now, before we get into strategy, because I know some people are like, well, I don't know that yet. Slow down, okay? Slow down. All right. But the first thing I need you to do is identify what type of trading is most attractive to you. Are you okay with being in a trade for 12 hours? If your answer is no, then guess what? You might not be a day trader, okay? Because we day traders, we're cool with being in the trade today. I just don't want to be in the same trade tomorrow, right? Because then that will mean I'm more of a swing trader. I don't want to be in trades forever, okay? I want to be in and out of the trade today. It doesn't necessarily have to be in the next 10 minutes, but today, I'm cool. You're probably a day trader. If you're like, no, I don't want to be in a trade for an hour, you're probably a scalper, okay? But establish that. What do you feel you're like, nah, I know I don't want to be in trade for a long time, okay? Be honest with yourself. If you're like, I really don't know yet, fine, you'll figure that out. But, I would say more than like, if you know for a fact, you're like, nah, I don't want to be in a trade for days, you can already rule out swing trading, okay? All right, everybody got it? Now, the second part to this, though, is strategy selection. You're going to use certain strategies for the type of trader you are or what you're trading. So, like, you may do more trending trades when you are a scalper. You know what I'm saying? Now, as a day trader, yeah, we have trends, but we know that the market doesn't trend as often as it does range. So I'm prepared to trade a ranging market. That means that I may be in a trade for a few hours. You know what I'm saying? Definitely not for days, but depending on when I catch it, I may be in a trade for a few hours, right? I'm cool with that. You may be a breakout trader. Like I think I shared this with y'all, but if not, I trade Bitcoin. Bitcoin ranges and consolidates a lot, okay? But when it goes, oh boy, it goes. So I trade breakouts when it comes to trading Bitcoin. So I have a breakout strategy specifically for Bitcoin. Everything else, I trade the range or I do the trend, okay? And that's what I mean. So now you're going to establish when you're going to apply those strategies and which markets you're going to focus on, right? And which you're going to apply them on. Now, this comes with time. This part comes with time. So when a new person is saying, "Oh, well, I don't get there yet," I know it's going to come with time. Once you're learning this skill, whether free or paid, eventually you'll get it. You'll figure out what works for you and what doesn't. What strategy works well with the type of trader you are. You'll figure that part out. Okay, so don't beat yourself up. Don't be like, "Oh my gosh, I'm not going to get it." You're going to get it. Okay. Step three, y'all. Screenshot. We already talked about this, but I want to just reiterate. We want to establish our entry and exit criteria. Okay, why are we entering the trade? Is it because the technical indicator is telling us, "Hey, yeah, you're right, this is buying"? Okay, are we confirming via patterns like chart patterns, candlestick patterns? Are we using support and resistance? What are we using to tell us, yes, I should be entering this trade? And what news is happening at the time? What economic events is saying, "Hey, you should be considering buying or selling right now"? And does the currency strength reflect that as well? Okay, that part. Exit criteria we already talked about. Listen, when we establish our take profit, that's an exit. When we establish our stop loss, that's an exit. If you don't use a stop loss, but you use reversal signals, via stop, support and resistance, trend lines, indicators, things of that nature, then by all means do so. But like I said, y'all, I'm team stop loss, so don't judge me. But that's step number 3. We got 3 more, y'all, 3 more. Okay, and then we're gonna be wrapping this up. Bear with me. Screenshot. Step 4 of our trading plan should have in here a risk management plan, which is our risk management rules, right? So what is our risk per trade? Remember, y'all, I already told y'all, if you're a beginner, 1% or less. Don't go above that. I'm pretty sure you're probably like me. Sometimes you got to see if the stove is hot. I got it. But once you see that it's hot, I need you to go back to the 1%, okay? All right, cool. For people that have a little bit more experience, you've seen consistent profit, you're consistently profitable week after week, month after month, okay? Then yeah, you probably gonna go up to 2%. I'm telling y'all now, I've heard some people who have taught me say that their max is 5%. I'm not that risky. My max is 3%, period. I'm not going higher than that, okay? That's part of my risk management plan. No greater than 3%. That's it. I don't care what's going on in the market. I'm not going higher than 3% of my account balance, okay? And then stop loss. Set your guidelines for your stop loss, okay? Is that going to be below support? Is it going to be above resistance? Is it going to be, the indicators? Is it going to be your candlestick patterns? Like, what is it? I just need you to make sure you know what that is, okay? And that's going to be part of your risk management rules and your risk management plan. Last thing we're going to talk about on that is risk to reward. Y'all, I love me some risk to reward. I have grown to love risk to reward because it has contributed to consistency in profit for me. Okay, so establishing a favorable ratio, y'all. Is that going to be 1 to 2 for you? Is that going to be 1 to 3 or higher? What is that? I want you to make sure that your gains are outweighing your potential losses at the end of the day, period. Whether you're a scalper, whether you're a day trader, swing trader, doesn't matter. Please make sure that you are looking to gain more than what you're risking. This leads to long-term trading success. Everybody got it? You screenshot it. Okay, cool. Now we're moving on. Step number 5. I need you to monitor and record your trades. This must be part of your trading plan because a trading journal helps you with establishing things that you should trade, times that you should trade, all of that stuff. Because when you have a trading journal, you're going to track every single trade. These are some of the things that you should have on your trading journal. If you did not screenshot this, screenshot it right now, okay? Everybody got it? Listen, you need to know what you're trading. That should be number 1. I'm trading USD JPY. Okay, cool. Write that down. I am entering USD JPY on February. Oh, I said February. Jesus. November 14th. Okay, cool. And I'm entering at 7 p.m. Okay, cool. Got it. Now I'm going to put what was my lot size, position size. Okay, so I entered with a lot size of 0.05. Okay, write that down or type it because some people use Excel spreadsheets. Kudos to you. All right. And then when it closes out, did it close out in a profit or loss? That's going to be your next column, right? These should all be columns, y'all. Next column should be profit or loss. Did it close in profit or loss? What was that amount? Okay. Oh, yeah, I won $50. Okay, cool. So plus 50. Got it. All right. Or you can color code it. Totally up to you. Whatever you want to do. All right. Then what day and time did it close out? Okay. What day and time did it close out? And if you trade candlestick patterns like me, I put what candlestick pattern I saw to tell me to enter that trade. Okay. There's a reason for that. I'm not going to go into detail on that because I really want to keep this, under an hour. All right. And then if you want to, which I highly encourage, especially for people who have experienced some form of trading trauma, I would say put down what emotions you were feeling, or if you decided to exit out of the trade early or whatever, like why did you decide to exit out of the trade early? Okay, put that type of stuff in there as well. So now you can collect that data and it helps you to make better decisions moving forward as a trader. You're going to review your trading journal every single week. I know I say I put on here weekly, monthly, but then I thought about it after I did. I was like, no, you need to do it at a bare minimum weekly. If you could do it every day, that's cool. But for some people, that's too much. So that's why I said weekly. Okay, go back and look at your trades and then see if you find any patterns, right? Which time of the day yields you more consistent profit? Which currency pairs, commodities, crypto, indices that you're trading, which ones are yielding you consistent profit? Got it? So now you can say, instead of I'm trading all of these things, now you can start pinpointing it, bringing it down to now I'm only trading 2 or 3 things, right? Hence why I have the list that I have. I trade gold, NAS 100, and I trade Bitcoin. Those are my 3. I'm going to add S&P 500 for 2025. I have a reason for that. But you know what I'm saying? So it'll be 4. I actually probably will replace S&P 500 with NAS 100, but I have my reason, like I said. Okay. But nonetheless, I have those 3 things, but the data is what told me to trade those. Everybody got it? Okay. Step 6. This is the last one. Screenshot this, y'all. We want to establish ongoing learning and, of course, review. So I need you to set some education goals. Plan to study trading topics or strategies regularly. So I need you to say, hey, look, I know I'm doing my trading 1 hour a day, but what if, let's say I get it down to, I only use 15 minutes of that hour that I have allotted. Well, now I can take that last 45 minutes and use that to read certain books. I can use that to study other courses. I can use that to just take the time to back test. Whatever it is, I can take that 45 minutes now because I've gotten really good at marking up my charts and identifying what I'm going to trade in 15 minutes. Okay, cool. Then on top of that, y'all, just make sure that you plan adjustments. We should always be adjusting what we're doing according to what the market is showing us. Everybody got it? Okay, so that was step 6. Hopefully y'all got y'all screenshots. If you didn't, y'all just come back and watch this again. Okay, because I really, like I said, I really want to keep this under 1 hour. So let me exit out of this so that way we can finish what we were talking about. I'm going to go into the last part. It's going to go fast and furious. Okay. Now, everybody got their screenshots, right? I hope y'all got y'all screenshots. All right. Like I said, if not, just come back. Okay. Rewind and then screenshot it. Okay. But we're going to move on. We're going to move on to the final part of this lesson. And that is how to stick to your trading plan. So I'm going to give you like 6 reasons, actually, why you should, 6 reasons discipline in following your trading plan, even when you're experiencing those losing streaks, because I know it's hard, is really critical though, y'all. Okay. So here's number 1. Number 1, sticking to your trading plan, even when you're losing, all right, it's going to prevent emotional decision making. Y'all, how many times have you sat here and while you're losing, anything, it doesn't matter, you make a poor decision. It's like, dang, man, I shouldn't have even did that. That's what happens in trading. Yeah. So now, instead of you being frustrated, angry, fearful, impatient, all of that stuff, you can now start to make more sound decisions. You're not being impulsive. You're not being reactive to the market. You're responding to the market, right? That's why we want to stick to our trading plan. Number 2, It's going to help us to maintain consistency because we all should know, consistency is crucial for long-term success in anything that we do, but most definitely in trading, right? So when we follow our plan, our trading plan, we maintain like a structured approach to trading, right? This allows us to continue to evaluate what works for us, but also what doesn't. We need to do that in order for us to make the adjustments and to see long-term success, all right? Number 3, y'all ready? Number 3, I told y'all I'm going fast and furious because I want to get this done, right? I want to keep it to an hour or less. So number 3 is we need to see effective risk management. That's what's going to happen. We're going to see effective risk management. Our trading plan helps us to establish those risk management rules, and it is going to help us to protect our money, y'all. We need to protect our money. So when we're losing our trades or we're in a losing streak, right? I know it's tempting to increase our lot size and whatnot, but y'all, we can't do that because I'm telling you now, that's the quickest way to lose our trades and blow our accounts because it's gonna backfire. That's what happens. I'm gonna tell you something else that no, let me stay on track. I'm not gonna do it. I was about to say something. I'm not gonna say it. All right, number 4, y'all. Number 4. When we stick to our trading plan, it helps us to build confidence and resilience. All right. So sticking to that plan, even when we are experiencing loss, it builds mental resilience. We need that because over time, it's going to reinforce that confidence in our trading, in our trading strategies, right? All of that is going to help us to just, trust our approach to the market. Okay. Even if right now the results aren't showing it, we still know that at some point we're going to get to where we want to go. Okay. Number five is sticking to our trading plan. It helps us to, actually evaluate our performance properly. So how else are you going to know what you're doing and if it's working or not if you don't have a plan? Y'all know, we just talked about it. Deviating from your plan, right? Especially during losses, it makes it really difficult for you to assess what is working and what needs to be improved and where can I make the adjustments. It's hard to do that. So if we stick to our plan now, we're consistently doing it, we can see those holes in our strategy and our approach to the market. Okay. And sticking to our trading plan helps reduce burnout and stress. We don't need it. We're not chasing losses. We're not over here changing our tactics and strategies over and over again. Because listen, nobody wants to be exhausted and fatigued and stuff. Like, no. Because I'm going to tell y'all something. I need you to think about this. How many times have you heard of someone that is like chasing a trade, jumping from strategy to strategy? How many times have you heard of them, if they've been doing that for a long time, how many times have you heard of them becoming millionaires or staying with it and being consistently profitable? More than likely, those people quit because they didn't find what they were looking for because they was jumping from trading strategy to trading strategy. From 1 minute I'm trading crypto to the next minute I'm trading Forex. Oh, well, that's not working. So now I'm trading gold. Nope, that's not working. So now I'm trading futures. Nope, that's not working. So now I'm going to stocks. Nope, that's not working. So now I'm going back to Forex. Y'all, no, find what works for you and stick with it. Okay. I would really highly encourage every single one of you today to avoid the temptation to deviate from your trading plan that you're going to establish or that you have already established and you know is working for you. Okay. Do this by keeping that trading journal. That is your armor, honestly. And then make sure that you're reviewing that trading journal every single week, y'all. If you can't do daily, which most of us, that's too much for us. You can't do daily, do weekly. Okay. When you do this, y'all, it's going to help you with identifying when you need to pivot, right? It's going to help you to see, oh, now I'm doing great. You know what I'm saying? I'm out here crushing it. Now I just need to keep doing what I'm doing. Got it? Okay. All right, y'all. So we're going to have to stop there because I didn't want to make this an extremely long video. So we're going to pick up with risk management next week. All right. And I'll be going into more detail than what I did in the last series. So stay tuned. stay on point, hit that notification bell so that way you know when I'm live. I will be live next week. That's November 21st. Okay, that'll be November 21st. The next part of this series will be readily available to you all. That's going to be at 1 p.m. Eastern, 12 p.m. Central. That's 10 a.m. Pacific. Okay, so homework. Let's get into this homework assignment. Everybody ready? So let me find it. Okay. Oh yeah, I know what I'm doing this week. Okay, so this homework assignment for you all this week is going to be simple. Create your not risk management, Jesus. Create your trading plan. So follow those 6 steps that I gave you. That's it. I just need you to follow those 6 steps that I gave you. Create your trading plan, y'all. Have that ready by next week, and then execute. And remember, y'all, adjust accordingly. Okay. Now, I would normally do Q&A, but I really have to go. So I'm going to answer a question that I get all the time. I get this so much. And it's like, especially when I'm talking about like trading plans and stuff, they're like, well, okay, so is it something else? Like, I feel like it's something else I should be doing in my trading plan or anything else I need to add. And I will say this, if I don't think I covered it, but in your risk management plan or the section of that trading plan, I need you to think about how many trades will you allow yourself to lose in a day before you stop trading for the day. I'm gonna say that again. How many trades will you allow yourself to lose in a day before you quit trading for the day? Meaning, if I lose 2 trades in one day, I'm done trading for the day. I'm closing out my broker. I'm closing out TradingView. I'm stepping away and I'm going and doing what I need to do. I'm not mad. I'm not upset. I'm just moving on. And I come back tomorrow, fresh mindset, fresh pair of eyes. I'm ready to go. That makes sense? All right. On top of that, I need you all to establish what your loss percentage is going to be per week, y'all, before you stop trading for the week. So let's say you're like, hey, look, out of my entire account balance, I do not want to lose more than 3% in a week. I have my reasons for that. Okay, cool. So if it's 3% and you lose 3% by Wednesday, according to your plan, you're not supposed to trade for the rest of the week. Everybody got it? So those 2 things I would say consider adding, because again, y'all, I'm really big on knowing what the risks are up front and then figuring out the profit after that, because I want to make sure I'm comfortable with the risk. This is something that was not taught to me initially. I had to learn that the hard way. And I had to learn that about me. It's better for me. It's better for my mental. It's better for me emotionally to know what I'm potentially risking before I talk about how much I stand to gain. Everybody got it? So that's what I would give to you all. And hopefully that helps. Hopefully this entire series or this whole part of this series has helped you in some way, shape, or form. And if it has, y'all, please, first of all, YouTube, thumbs up. Okay. Second of all, share. Don't be selfish. Don't hold on to it. If you know someone that's been trading and has been struggling and they're like, man, I'm about to just sit this down because this ain't it. I don't lost too much money. Show them this. You don't have to ask them if they watched it. Just give it to them and then let them do with it what they will. All right. And if I'm their cup of tea and if it makes sense to them, they'll make the adjustments how they see fit. Okay. So that's it, y'all. Just know we talked about, a trading plan, what it is, how it serves us. And then we also went into our entry and exit criteria. We talked about risk management just a little bit, how we're going to incorporate that into our trading plan. And I also showed you all step by step what we should be doing, what we should be looking for and adding into our trading plan. Okay. So now you all know you have your homework, create your own trading plan with those screenshots or notes that you took. Okay. Create your own trading plan. And next week, November 20. Oh man, I just said it. November 21st. November 21st at 1 p.m. Eastern, 12 p.m. Central, 10 a.m. Pacific. We'll be talking about risk management and, of course, technical analysis, but it's going to be a little different spin on it because we're going to talk about some of the common mistakes that new traders make when it comes to those 2 things. All right. So that's all I have. I hope y'all have a wonderful evening, okay? A wonderful afternoon, a wonderful morning, whatever time it is when you're watching this. And also have a great weekend. And if I don't see you on the Forex Live Market Analysis on Sunday, that's at 10 p.m. Eastern, 9 p.m. Central, 7 p.m. Pacific. If I don't see you then I'll see you next week for the next part of this series, okay? So I'm going to leave y'all with my favorite quote, and that's from the legend. His name is Arthur Ashe, and he says, start where you are, use what you have, and do what you can. Y'all have a wonderful weekend, day, all that good stuff, and I'll see y'all next time. Bye, y'all.